Commercial real estate industry on edge as downtown empty office space goes unused. America's downtown centers wither amid fading hopes for a post-pandemic office boom. Commercial real estate woes run deeper than in past downturns. Fears mount that Europe's commercial real estate sector could be the next to fall. There's no way to sugarcoat this one, you guys. Commercial real estate is in some serious trouble, and office buildings specifically are in even bigger trouble. Every day I spend time in the morning getting up to speed on the latest state of the real estate market by reading various news outlets, listening to economists, looking at data around inflation, inventory, and rates. And there are two things that I have gathered over the course of the past couple of months that everybody seems to agree on. Nobody knows where the residential real estate market is headed, but everybody, literally everybody, seems to agree that there is some serious pain ahead in commercial real estate. This is scary stuff because the commercial real estate market is so big that it single-handedly represents a pretty good chunk of the overall US economy. So a collapse in commercial real estate isn't going to mean just some billionaires or developers are going to be in trouble. It seriously could signal a much darker and scarier story for all of our financial futures. As far as I can tell, there are 5 key factors that seem to be driving all of this pain in commercial real estate. First, we have a lot of loans coming due in 2023, about 270 billion worth, meaning that these owners are going to be forced to either refinance or sell before the end of the year. And for anybody unfamiliar with how this works, commercial loans mature much faster than residential mortgages, meaning that even though they're usually written for a term of 25 years, they balloon or become due in full after just 2 or 3 or 5 years. The second issue is a combo of vacancy rates being really high, specifically in office and retail, plus interest rates being really high as well. This means that if that loan becomes due and an owner is forced to refinance, they will be stuck with a much higher payment on a property that is generating much less income due to vacancies. I mean, think about it. If you own a big $50 million skyscraper in downtown, the payment on this thing is probably around $260,000 per month if you bought it in the last 5 years. Well, if your payment is $260,000 a month, but you're bringing in $350,000 per month in rental income, then you're collecting $90,000 in net rental income every single month. Not a bad payday, not a bad way to live. But let's say your office got hit hard after the pandemic, and now because of vacancies, you're only bringing in about $200,000 per month in rental income. At this point, you're actually taking a loss every month compared to that mortgage payment. But what's even worse is that when that loan matures, you are going to be forced to refinance at today's interest rates, and today's interest rates are ugly. On this same $50 million skyscraper deal that we're talking about, a loan at a 7% rate would come with a $350,000 mortgage payment. And remember, since your building is now sitting half empty, you're only collecting that $200,000 per month in income. This means that that same building that was once making you $90,000 per month, you're now losing $150,000 a month on just to make ends meet. Ouch. The third issue is around valuations, because let's say that you are that building owner who's now losing $150,000 per month. One thought could be, well, why don't you just sell the thing, but not so fast. See, commercial real estate is valued based on the amount of income it produces, meaning if your property is sitting half vacant and is producing way less income than it was a few years ago, that means it's worth way less money. Sellers in this condition aren't going to sell. I mean, why would they if they stand to lose tens of millions of dollars? I mean, the only reason they would sell, I guess, would be if they were forced to. There's one office building in San Francisco that was said to have been worth $300 million in 2019. It's expected to sell at auction for just $60 million today. I wouldn't want to be that owner. The fourth issue here is that vacant office space is creating kind of a ripple effect, because let's say that you've got a couple 100,000 square foot skyscraper in downtown Manhattan that's sitting 35% vacant. Well, that's not just an issue for the office building owner. The surrounding retail shops and restaurants who depend on those office employees as customers are hurting as well. And if they don't have as many customers, they're less likely to be able to afford their rent. Now we've got a problem for the office building owners and all of the surrounding retail building owners as well. The last thing that I see is that they say real estate accounts for about 25 25% of US bank books, and that number is as high as 65% for smaller banks. This means that if these commercial real estate owners end up having a hard time making payments on their properties and then they just walk away from those properties, these banks could be in trouble, especially the smaller banks. And I think that we all could agree that it would not be a good thing if we start seeing a domino effect of banks collapsing. One thing that I see a lot of people try to suggest is that we should be turning these old office buildings into apartments for people to live. I mean, if we have a bunch of vacant office space, but we have a shortage of housing, that does seem like a pretty plausible plan. But this is much easier said than done, you guys. I looked at doing this myself. In fact, this exact building you see behind me, I actually investigated to see if I could convert it into apartments. They're asking $4.2 million for this place. It's a 16,500 square foot office building. This place is 100% vacant, and as you can see, it looks like it could be a good candidate to kind of cut up into like a dozen apartments or so. But I quickly learned how tough this process would actually be after you look at the permitting process and dealing with entitlements and rearranging the floor plans, not to mention getting all the plumbing and electrical in all of the right places and getting this to basically residential code versus the commercial code that it's up to now. After talking with some friends who have had success with this and looking at this exact deal myself, I learned that yes, it is possible to convert offices into apartments, but it is going to be very challenging and very expensive. If these buildings can't be repurposed into apartments, it really makes you wonder what the future holds for these office buildings that are literally scattered all over the country. One thought is that there's always going to be demand for smaller footprint office space, meaning if you have a 100,000 square foot building, but you cut it up into 4 separate 25,000 square foot floors rented to 4 different companies, that could be a good move. I don't think that we're going to see a ton of buildings demolished in favor of a better use, but in some cases, there might not be any other options. Cities like New York, San Francisco, and Chicago are getting hit the worst here. They have literally millions of square feet of unused space right now, and it seems like more vacancy is coming, especially when you see companies like Google asking some employees to share desks as they focus on office downsizing. What I think is kind of weird is that around where I live, there is still a ton of office space being built. We have big commercial complexes popping up all over the place that are filled with apartments, hotel rooms, retail, and hundreds of thousands of square feet of new office space. Some people speculate that this new Class A office space is going to stay in demand, and it's the older stuff built back in the 1970s and 80s that are going to struggle. I mean, it kind of makes sense. If a company is going to send their employees back to work, might as well send them to a nice new shiny office building and not some old dusty building that was built like 50 years ago. CNN reported the change in commercial real estate property value from 2021 to 2022. It's crystal clear where the pain is at, with apartments, hotels, and industrial all holding on strong with values actually going up year over year, but office and retail, not so much, with values trending down in both sectors. Historically, the default rate on commercial real estate is pretty low, way lower than residential. And as of now, they actually say that most debt on commercial real estate is being paid as agreed. I saw the default rate is down as low as about 0.5%, but to me, this still feels like a calm before the storm. If big companies continue to allow their employees to work from home, and if there's a permanent shift in demand for commercial office space going forward, then I can't imagine there being a happy ending to this story. I'm not trying to be all doom and gloom here, but it's not looking good to me. I'll see you guys next time.